Right now, as we're heading towards the end of 2025, the global diamond market is, well, it's telling two completely different stories. This isn't your simple boom or bust cycle. We're talking about a market that's literally split right down the middle. And today, we're going to dig into why.
So, what's the deal? How can some diamonds be red hot, getting snapped up left and right, while others are just being left out in the cold? Let's break down this strange story of high demand and a deep freeze happening at the exact same time.
All right, so here's our game plan. First, we'll unpack this whole tale of two markets thing. Then we'll dive into the battle of the sheeps, which ones are winning and why. After a quick trip around the globe for a snapshot of different markets, we'll look at the hard numbers, decoding the price data. And finally, we'll try to figure out what's the next cut for the industry.
Okay, let's dive right into section one, the tale of two markets. Honestly, if you can get your head around this one idea, everything else just kind of clicks into place. Seriously, if there's one word you need to remember from all of this, it is selectivity. Buyers have gotten incredibly picky. I mean, they know exactly what they want, and they are completely ignoring everything else. This isn't about demand just dropping across the board. It's more like it's being focused with a laser beam on very, very specific diamonds. So here's how that split actually looks in practice. On the hot side, the stuff that's flying off the shelves, we're talking large, high-quality stones, and especially those well-cut, long, fancy shapes. But on the cold side, oh man, it is a total deep freeze for this smaller stuff. Fancies with bad proportions, and those tiny little accent stones they call melee. That's the inventory that's just sitting there, piling up in suppliers' vaults.
And that selectivity brings us right to our next point, which is this battle of the shapes. This is where you can really see how what people want is driving the entire market.
And wow, is the demand specific? Right now, it is all about those elongated shapes. Think long ovals, marquise, emerald cuts. They're in super high demand, and there just aren't enough of them. Meanwhile, things like small rounds, those shorter, kind of stubby ovals, and yeah, even the once super popular princess cuts, they're really slowing down. So why the shift? Well, it seems like people want a diamond that gives a bigger visual impact on their finger. And those longer shapes, they totally deliver that look.
And look, this isn't just about what looks good. It's having a massive financial impact. Right now, a long cushion cut diamond is commanding a premium of 20 to 25% over a square one of the exact same quality. I mean, that is a gigantic difference, and it's driven purely by shape. And this quote from the report really just hits the nail on the head. Very well cut, fancy shapes are difficult to find and are commanding premiums. It's not just about having the right shape, you see. The cut has to be top-notch. A beautifully cut oval is a hot commodity, but one that's poorly proportioned, it's basically impossible to sell. Quality is king right now, absolutely paramount. Okay, so we've got a handle on what's happening, but where is this all playing out? Let's take a quick spin around the globe for a snapshot of what's going on in the key markets. First stop, the US, and the story here is pretty much a perfect mirror of the overall market. You've got strong demand for those must-have items, long ovals and marquises are definitely hot. But because buyers are being so selective, suppliers are just watching all those other less desirable goods pile up. All right, let's hop over to Belgium. And interestingly, the mood here is a bit more positive. It's a really good market for, you guessed it, long, fancy shapes. And again, we see that laser focus on quality. Buyers are being super picky about the cut, especially for stones that are 1 carat and up. Now, India is a totally different story. Business is really sluggish for this time of year, and the natural diamond market there is getting squeezed from two different directions. One is the growing influence of synthetics, and the other is a real concern over these cut-price rough diamonds coming out of Russia. And wrapping up our world tour in Hong Kong, we see the exact same trend. There's good, steady interest in those larger, fancy shapes. We're talking ovals, emeralds, and marquises between about 1.7 and 3 carats. But for anything under a carat, the market's really weak. It's the same polarized story, just in a different city. All right, we've talked about the trends, we've heard the anecdotes. Now let's look at the cold, hard numbers. The price data really shows the real-world financial fallout from this split market. Okay, so this RAPI table really lays it all out. Just focus on that last column, the one labeled Y2Y. That's year-over-year change. Look at the top, at the smaller sizes. Prices for half-carat diamonds, they are down a jaw-dropping 23%. But now, let your eyes drift down to the bottom, the 2 and 3 carat sizes. What do you see? Prices are stable, even slightly up. That, right there, is the tale of two markets in black and white. Let's just pull out that one number and really let it sink in. And nearly 23% drop in price for half-carat diamonds in a single year. You guys, this is not some small market correction. This is a massive, fundamental shift in value for a huge chunk of the industry. And if you want to see what that downward pressure looks like on a chart, well, here it is. This is for 1-carat diamonds, which are kind of the middle of the road. And even here, you can see this relentless decline. It's dropped over 5% in just the last 3 months. It just goes to show you how persistent this pressure is on that colder side of the market. So, with all this going on, where does the diamond industry go from here? For our last section, let's look at how the industry is reacting and what new challenges might be lurking just over the horizon. And this is where we start to see the dominoes fall. Because suppliers have this glut of short ovals they can't sell, manufacturers are now shifting their production back to cutting round diamonds. But wait, that creates a brand new problem, right? A potential oversupply of rounds. You add that to the ongoing concerns about cheap Russian rough and the fact that major buyers, the site holders, are already starting to refuse some of their rough diamond allocations, and what you have is an industry in a serious state of flux. And all of this leaves us with one massive, critical question for the future. As the entire industry pivots away from the shapes that aren't selling, are they accidentally setting themselves up for the next crisis? In trying to solve today's problem, a glut of short ovals, are they about to create a brand new one? A glut of round diamonds? I guess only time will tell.